Good morning, welcome to Catex TV. My name is Frank Fortunato. Today is Tuesday, March 17th, 2015, St. Patrick's Day. If you wish to watch us or follow us on Twitter, go to Catex TV. In Australia, meteorologists are warning that Cyclone Nathan is set to have a major impact as a Category 3 storm or higher when it hits far north Queensland later this week, probably on Friday. They're issued a cyclone watch zone for Cape Melville and Cardwell as part of its update this morning. It comes as forecasters are recommending that communities prepare for a major hit. Forecasters are saying they should watch out for dangerous storm tides and expect heavy rainfall as well as strong winds. There could be a significant impact. Everyone in that area from Cape Melville down toward Innisfail should be making preparations right now. This puts the city of Cairns in the firing line along with Cooktown, according to the Australian meteorologists. Japanese insurers are notoriously competitive with each other, and earlier this month when we announced that Sompo Japan had acquired a 5.68% stake in the French reinsurer Scor with an intention to increase that stake to 15%, immediate ramifications ensued. Mitsui Sumitomo and Tokyo Marine and Alloy Nissay Dowa, three gigantic Japanese insurance companies, signaled that they were prepared to jettison Scor from their reinsurance treaties because a competitor had invested in Scor. Victor Penier, the CEO of Scor's property and casualty company, was dispatched from Paris to Tokyo immediately to speak with the three. Tokyo Marine has decided to stick by Scor, and it's unknown what Mitsui Sumitomo and Alloy Nissan is going to do yet. However, the Japanese tendency is well known. Back when Kiln was acquired by Tokyo Marine, they were cut out immediately from the other Japanese purchasers, and Canopius was told the day after its deal with Sompo was announced that it would be ejected from reinsurance treaties of the other big three Japanese companies. Scor has had a historic, very loyal and strong relationship with the Japanese market. The Japanese market has stuck by Scor back in the early part of the year of this century when Scor lost its A- credit rating, and in turn Scor stuck by the Japanese after the Tohoku quake in March 2011, renewing its share of loss-hit treaties at great cost to themselves. Presumably Dennis Kessler will navigate its way through this as well. The UK insurer Royal Sun Alliance has in fact appointed Goldman Sachs to sell its Latin American business. That's now believed to be worth in the neighborhood of about $740 million US. The carrier has appointed Union Bank of Switzerland in order to broker its Middle Eastern business. Likely buyers for the Latin American business include Ace, Mapfre, Travelers, Zurich, and there are some other small ones who might be approached. Now, it's an interesting story as well. When Partner Re decided to accept the Axis deal announced last month, this was not known, but apparently Partner Re did not approach any other parties about a potential transaction. In a proxy statement published yesterday, Partner Re, it was revealed that Partner Re had approached Axis about a deal in December, with bilateral discussions then leading to a board agreement by the end of January for a valuation of about 0.9 times book value of Partner Re. Deliberations had led Partner Re to conclude that Axis Re was the best fit for the company. They had decided not to seek any inquiries elsewhere. They revealed that they had identified Axis as an attractive merger of equals partner back in November of 2014. Two reasons: they wanted to have access to primary insurance, and they were afraid of the continuing effect of alternative capital on the market. Axis responded saying that they would be willing to entertain, if not agree outright to the bid, only if Albert Benchimol, the CEO of Axis, was going to be retained as the CEO of the overall group. Benchimol had done time at Partner, and the Partner board quickly agreed. Global Seat in Zurich, one of the big buyers, is expected to seek a major rate reduction for its reinsurance program when it releases its order terms to the reinsurance market for the April 1st renewals. They're looking to get a cut of about 15%. on their premium rates. More than 16 million Americans have gained health insurance coverage as a result of the Affordable Care Act, also known as Obamacare. These are 16 million new customers of American primary health insurance companies. This is why one of the biggest roadblocks for repeal, as if that would ever happen, coming from the Republican Congress, would be fierce opposition from the insurance lobby, who are making quite a bit of money off the law. There's an interesting story from the Royal Gazette in Bermuda, written by our friend Jonathan Kent. Bermuda, of course, has a 0% tax rate on corporate profits, as well as individual income tax, which is one of the reasons it's an attractive business locale. It's also one of the reasons that it's viewed from time to time by competing regulators as a so-called tax haven. One of the strongest defenders of Bermuda is, in fact, John Charman, who is the chairman and CEO of Endurance Specialty. Charman said that he now believes that a tax on company profits is inevitable, and that it, in fact, would be in the long-term interests of Bermuda and its economy. Charman said that he believes that it should be phased in over a 20 or 25-year period. He mentioned 10% as the tax rate. He indicated as well that the imposition of such a tax would dispel immediately any sort of concerns by other regulators and competing jurisdictions that Bermuda, in fact, is a tax haven, and that this would, in fact, be good for Bermuda business. Mr. Charman is, in fact, probably exactly correct. If you're one of the several million people on Fifth Avenue in Manhattan or somewhere in Boston beginning to observe the St. Patrick's Day festivities, please be careful. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.